Hello YouTubers, and welcome back to my channel. My name is Pablo Espinal, and in this video we're taking a look at the foundational concepts of support and resistance in trading can significantly enhance your trading performance. We'll explore 10 price action strategies that will help you master support and resistance trading. If you like this type of content, don't forget to like and subscribe. Okay, let's do this. Or Chapter 1, Understanding Support and Resistance. What are support and resistance levels, and why are they crucial in trading? Imagine a ball bouncing between the floor and the ceiling. In trading, the floor represents support, a price level where an asset tends to stop falling due to increased buying interest. The ceiling represents resistance, a level where the price tends to stop rising due to increased selling interest. Consider a trader named Alex who struggled with unpredictable market moves. After learning about support and resistance, Alex could anticipate potential reversal points, leading to more strategic entries and exits. Think about the confidence you'll gain by identifying these key levels, allowing you to make informed trading decisions and reduce uncertainty. Mastering support and resistance transforms chaotic charts into structured opportunities, empowering you to trade with clarity. Begin by analyzing historical price charts to identify recurring support and resistance levels. Practice drawing these lines to familiarize yourself with market behavior. Chapter 2, The Role of Trendlines in Identifying Support and Resistance. How can trend lines help in determining dynamic support and resistance levels? Imagine hiking up a mountain trail. The path's incline represents the market's trend. Drawing trend lines on a chart helps visualize these inclines, indicating dynamic support in uptrends and resistance in downtrends. Think of Emma, who used horizontal support and resistance, but missed out on trending markets. By incorporating trend lines, she identified better entry points aligned with the market's direction. Envision the satisfaction of aligning your trades with the market trend, increasing the probability of success. Trend lines act as your compass in the trading landscape, guiding you through dynamic market movements. Practice drawing trend lines on various charts. Chapter 3, Utilizing Moving Averages as Support and Resistance. How can moving averages serve as dynamic support and resistance levels? Imagine a river's current guiding a boat's path. Moving averages smooth out price data, indicating the market's general direction and acting as dynamic support or resistance. Consider John, who struggled with volatile markets. By incorporating moving averages, he identified smoother trends and potential reversal points, improving his trading outcomes. Think about the clarity and direction moving averages can provide, reducing the noise of erratic price movements. Moving averages are like the market's heartbeat, offering insights into its underlying rhythm. Experiment with different moving average periods on your charts. Notice how they interact with price and use them to identify potential support and resistance areas. Chapter 4, Recognizing Psychological Support and Resistance Levels. So, what are psychological levels and how do they influence market behavior? Imagine setting a thermostat to a round number like 70 degrees Fahrenheit because it's easy to remember. Traders similarly focus on round numbers such as $50 or $100, which can act as psychological support or resistance levels. Sarah noticed that prices often stalled at round numbers, but didn't understand why. Learning about psychological levels, she anticipated these pauses, optimizing her trade entries and exits. Consider the edge you'll gain by understanding these subtle market cues, allowing you to anticipate potential turning points. Recognizing psychological levels equips you with deeper market insight, turning apparent randomness into predictable patterns. Pay attention to round numbers on your charts. Observe how prices behave around these levels and incorporate this awareness into your trading strategy. Chapter 5. The power of multiple time frame analysis. How does analyzing multiple time frames enhance support and resistance trading? Imagine viewing a cityscape from different heights, a rooftop, a hill, and an airplane. Each perspective offers unique insights. Similarly, analyzing multiple time frames provides a comprehensive market view. David focused solely on daily charts and missed broader trends. By examining weekly and monthly charts, he identified stronger support and resistance levels, leading to more informed trading decisions. Think about the confidence that comes from a holistic market understanding, reducing surprises from unseen trends. Multiple time frame analysis is like having a zoom lens for the market, allowing you to see both the bigger picture and finer details. Incorporate at least 2 different time frames into your analysis. Use higher time frames to identify major support and resistance levels, and lower time frames for precise entry and exit points. Chapter 6. Identifying false breakouts. How can you distinguish between genuine breakouts and false ones? Imagine a sprinter who false starts before the gun goes off. In trading, prices may momentarily breach support or resistance levels, but then reverse trapping traders. Lisa often entered trades on initial breakouts only to face reversals. By waiting for confirmation, a retest of the broken level, she filtered out false breakouts and improved her success rate. Consider the frustration of being caught in false moves and the relief of implementing strategies to avoid them. Patience and confirmation are your allies in trading, helping you avoid traps and seize genuine opportunities. Before acting on a breakout, wait for additional confirmation, such as a retest of the level or increased volume to validate the move. Chapter 7. The significance of volume in confirming support and resistance. How does trading volume validate support and resistance levels? Imagine a crowd cheering louder as a game reaches a critical point. In trading, increased volume at support or resistance levels signifies stronger conviction in price movements. Michael noticed that some breakouts failed despite price movement. By analyzing volume, he identified which moves had genuine momentum, leading to more successful trades. Think about the assurance you'll feel by aligning your trades with the market's true momentum, reducing uncertainty. Volume is the market's voice. Listening to it ensures you're trading in harmony with the broader sentiment. Incorporate volume analysis into your routine. Use it to confirm the strength of support and resistance levels before making trading decisions. Chapter 8. Employing candlestick patterns at key levels. How can candlestick patterns enhance trading at support and resistance levels? Imagine reading a story where each chapter reveals the character's emotions. Candlestick patterns depict market sentiment, especially when they form at support or resistance levels, Emma often overlooked candlestick formations and missed reversal signals. By studying patterns like doji and engulfing candles at key levels, she anticipated market turns more effectively. Emma often overlooked candlestick formations and missed crucial reversal signals. After studying patterns like the doji, engulfing candles, and hammers at key support and resistance zones, she started spotting high probability trades with confidence. These patterns acted like warning signs, showing her exactly when buyers or sellers were gaining control. Imagine the clarity you'll feel when you spot these patterns forming right at strong support or resistance levels. It's like the market giving you a signal, whispering, "Here's your moment." Combining candlestick knowledge with support and resistance transforms you from a hopeful trader into a strategic one, acting not on guesswork, but on the market's own signals. Start reviewing your charts today. When price approaches key levels, watch closely for candlestick formations. Practice interpreting their meaning and use them to guide your next trade. Chapter 9. Why should you combine static and dynamic support and resistance levels? Imagine planning a cross-country trip. You need to know both fixed landmarks like cities and changing factors like weather or traffic. In trading, horizontal support and resistance levels are the landmarks, while trend lines and moving averages act as dynamic guides that adjust with price action. When Alex first learned about support and resistance, he only relied on horizontal levels, but markets aren't always range-bound. By incorporating dynamic levels from moving averages and trend lines, Alex saw a clearer roadmap even during trending markets. Think about the confidence you'll gain when you can combine both approaches, static and dynamic. You'll no longer feel blind to changing market conditions. Mastering this blend is like learning to see both the map and the road signs in real time. It prepares you for any market environment. Add dynamic levels like moving averages and trend lines to your charts. Watch how they complement horizontal support and resistance, and use this combined knowledge to fine-tune your trades. Chapter 10. How can you build a step-by-step plan for trading support and resistance? Imagine opening a new business without a business plan. You might get lucky here and there, but the odds of sustained success are slim. Trading without a clear support and resistance plan is no different. Lisa, after months of inconsistent trading, realized she needed a process. She created a support and resistance playbook, a checklist for every trade. She identified the level, waited for price action confirmation, checked volume, and only then entered. This simple system transformed her results. Imagine replacing the stress of impulsive trading with the calm confidence of following a clear, proven process. Every trade has a reason. Every entry has a justification. Consistency breeds success. By following a process for every support and resistance trade, you reduce emotional decisions and trade like a professional. Today, create your personal support and resistance trading plan. Write down your criteria, how you'll identify levels, what confirmation you'll wait for, and how you'll manage risk. Stick to this process for your next 10 trades and see the difference. Support and resistance aren't just lines on a chart. They're the invisible battleground where traders fight for control. By mastering these 10 price action strategies, you'll no longer be a spectator. You'll understand how to read the market's intentions and position yourself for success. Picture the confidence you'll feel when you enter trades, not because of a gut feeling, but because you've identified strong levels, seen clear confirmation, and know exactly where your stop and target sit. Every successful trader you admire started with this: understanding price action at key levels. It's not talent, it's process, and you can master it too. Your mission today is to pick your favorite chart and mark your support and resistance zones. Observe how price reacts at these levels and apply 1 or 2 strategies we covered today. If you found this valuable, make sure to like, subscribe, and share this video with your fellow traders. Let's build smarter, more confident traders together. Well, that's it for this one. As always, thank you for watching, and I'll see you in the next video.